The oil sector has been an interesting and tricky area in which to invest. I'm joined now by Brian Kessens. He's portfolio manager with Tortoise Capital. Nice to see you here in New York.
It's great to be here.
So this is your specialty, the energy area. I want to ask you quickly about prices. They've had a big rebound. Do you get any sense that the worst is over for oil prices?
We do think that over the course of 2016, oil prices are going to reach more of a constructive level. We've seen some conversations, at least, around OPEC, and we forecast that in the U.S., particularly in the shale basins, that we're going to see declines throughout 2016. So we'll be in a better supply and demand balance through year end.
But shale isn't going away, in your view?
Not at all. If anything, shale just continues to get better for a couple of reasons. One is service costs have come down pretty dramatically over the past 18 months. We expect them to continue to be low as there's a lot of supply as it relates to services. And then the intensity of the fracking specifically just continues to get better. We're continuing to get more of the resource out of the actual rock.
So I mentioned early on it's a tricky area to invest, but let's focus with a shale play first that you like, and that's EOG Resources, because you don't think all shale's created equal.
That's right, and EOG has some of the better acreage in some of the best basins, and particularly in the Eagle Ford, in the Permian, and in the Bakken. They have reduced their drilling activity this year to wait for some better prices, but they've got a fortress-like balance sheet. They haven't had to issue equity like a lot of other E&P companies are doing in order to maintain their investment grade status. And they continue to have a top flight management team that throughout the industry is regarded for their technical expertise.
And you don't think they will have to offer equity, do you?
We don't anticipate that they're going to have to offer equity. They are spending within their cash flow this year and continue to have a strong balance sheet.
How about Pioneer Natural Resources? Why do you like that one?
Pioneer's another name that we like, in particular for their acreage in the Permian Basin. They've got some of the better acreage there, and specific to the Permian, it's not just one layer of shale, but they've got access to up to 6 layers of shale. They have issued equity. They have a strong balance sheet going throughout this year. They are also well hedged, and they're spending within cash flow. They did reduce their capex a little bit, but unlike a lot of other E&P companies, this year they're actually able to grow their production, growing by 10% this year.
Do you expect that there will be disruptions still to come in this sector in terms of bankruptcies or more M&A activity that might actually strengthen some of these stocks that you mentioned?
We would not be surprised if there are some bankruptcies, particularly from those companies that are distressed, not able to issue some equity. Also wouldn't be surprised if we see some M&A activity. I think what we need to happen for M&A is we need that first deal to get done and for that first deal to be successful, and then that'll give everyone else the confidence that the remaining deals can work as well.
All right, let's move away to a different area, and that's an MLP provider that you like, Enterprise Products Partners. Why does that one stand out in the group?
It stands out. One of the themes that we're also taking advantage of as it relates to our investing is that of exports, and as it relates to NGL export, particularly for propane, butane, and soon to be ethane as well. Enterprise is very well positioned as they continue to build more export facilities. And they're also building some crude oil export facilities as well, which we expect to increase between now and the remainder of the decade. I
do feel like the export story has sort of gotten lost in everything that's happened with pricing, because it is rather significant for some of these companies, including Cheniere Energy.
Yeah, Cheniere just last week actually exported LNG from the U.S. for the first time to Brazil. And this is just the beginning of the U.S. exports in really a pretty major way. Cheniere's Train 1 just came online last week for the first time. And between now and the end of the decade, Cheniere's going to become the biggest LNG exporter, but there are some other LNG export facilities coming online as well. So
for Cheniere in particular, is that already baked into the stock price?
We don't think so. If you look at it, what people have had some concern about, I think, is the fact that they've been more of a construction company to construct all of these export facilities, but they've proved that they have the ability to construct one, and now they're moving into more of an operational company as they finish constructing all the other facilities.
Some interesting picks. Brian Kessens, thanks for your time.
Thank you very much.
I'm Rhonda Schaffler for The Street.